Hey, good afternoon, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday. I hope you guys have a great upcoming weekend coming up ahead, especially with St. Patrick's Day on Sunday. So be safe, and hopefully you're able to get back to work on Monday. We do got a bunch of economic news releases scheduled for today. We'll jump right into it. We'll start off with the Consumer Price Index, or the CPI, for the month of February. This is the inflationary index that we look at for the consumer level. And back in January, we had 0%. We figured the number would go up to 0.6%, and it exceeded that to 0.7%. So not a good headline number looking here. But once you strip out the food and energy, which creates the volatility, we have what they call the core CPI. And with the core CPI, we had 0.3%, which is, remember what I was talking about, was we had to mention that this is something we want to watch, because obviously 0.3 could, if that continues, it'll be well over 3% for the year for inflation, which is not a good number. We want to keep under 2.5%, and especially when the Fed mentioned that they're using the rates as a gauge to inflation at anything under, once it approaches 2.5%, and unemployment to 6.5%. So if we reach there with inflation, they may raise the rates based on to keep inflation in check, as that could be an enemy. So we had an estimate come down a little bit, down to 0.2%, and it came in at 0.2%. So a little bit more moderate numbers. The reason being, with the headline numbers, obviously we could see that the gasoline stations price of oil came up, and that's kind of what created the headline news with the higher inflation right there. We also have the Empire State Index, which is the manufacturing region in the New York region. Manufacturing in the New York region. So we had a 10, and we figured it would stay the same in March, and it came down to 9.2. So still good numbers. It's still showing some expansion, but not, it simmered down a little bit in March. Then we also have the industrial production for the month of February. We had 0%, and we were expected to climb, and it came up. So kind of eerie if you look at the numbers between the headline CPI and this. It's kind of funny how this kind of played out. Not that they base any correlation between the two, but it's just kind of funny how they kind of came out. Consumer sentiment for the month of March. This is we have two of them. So this is the initial reading for March, and we'll have another one later in the month. So at a 77.6 for February, or the final reading. We figured it kind of climb upwards in March, and actually drop down to 71.8. So not a good number there. That is something to be to keep an eye on. I mean, I'm sure with all the sequestering talk, with the people paying higher taxes, so they're seeing that in their paychecks, to a lot of things that are kind of going out there. It's probably starting to hit a few of those people now. And then obviously the jobs, they're talking about, one of the delays is the new Obamacare, that a lot of employers are reluctant because there's a lot of uncertainty in there. So let's go ahead and take a look at the headline news here. And basically, stock market's down so far this morning, which is kind of a surprise, as we've been having a long string there. So I guess maybe today might come to an end, that long streak they've been kind of having here. So let's take a look at the bond market, see what's going on. And of course, the bond market's having a good day here. So we're up about 24 basis points for the day. We start off about 2 from where we left off yesterday. So we closed upwards yesterday, and we're knocking on the door to the ceiling. So we're on the upper threshold here, and almost touching the 10-day moving average. So a good day here. We're at 102.66. We could be hopefully on our way up to the 103 level here soon. I will have to kind of wait and see. As remember, we do have a couple of these gap openings here that need to be closed. We haven't closed those yet, so we could be on the verge of reaching those. Next week we will have a lot of volatility in there. So, but know what, we had an improvement in the interest rates so far today, which is a great sign. Hope you guys have, again, a great weekend. Thanks for watching. We'll see you guys on Monday.